Global events, especially geopolitical tensions, significantly influence the financial market, and the recent escalation of the Israel-Palestine conflict is no exception. The turmoil it triggered has raised concerns among investors, with many eager to understand the potential impact of this event. While the underlying reasons for the ongoing cycle of violence in this region may be complex, the economic consequences of the conflict are more straightforward to comprehend. Stay tuned as we take a look at how the Israel-Palestine war will impact the financial markets. But before we dive into today's video, take a moment to click that like button and subscribe to our channel. Be sure to also hit that notification bell so that you won't miss out on any of our upcoming videos. Geopolitical risk, typically associated with war, terrorism, and regional conflicts, is an external shock that defies mitigation through investment diversification. While it significantly affects financial markets, some argue that its impact is relatively short-lived. Since financial market sentiment relies on the expected future return of financial assets, it thrives on the uninterrupted servicing of assets, or that bonds will be paid back, as well as active trading of such assets. However, geopolitical tensions and war disrupt these expectations. While financial market uncertainty is a constant presence, it intensifies during times of war and geopolitical unrest, leading to increased volatility. These conflicts hurt financial markets, with rapid fluctuations triggered by news from opposing sides. This uncertainty poses dilemmas for both investors and consumers, influencing their spending and investment choices. Furthermore, economic momentum is disrupted, resulting in an economic slowdown. The global economy, already dealing with high inflation, is now confronting a new geopolitical crisis in the Middle East due to Hamas's surprise attack on Israel, the subsequent declaration of war by Israel. The Middle East, responsible for almost a third of the world's oil supply, has seen a notable increase in crude oil prices due to the ongoing conflict. While there have been significant price hikes in Brent crude and U.S. West Texas Intermediate crude, the crisis currently doesn't present an immediate threat to the oil supply. The concern lies in the potential for the conflict to spread to neighboring nations, potentially escalating into a more severe proxy war involving the U.S. and Iran. Rising crude oil prices are, however, reigniting concerns of high inflation in the global economy. Major economies like the United States, India, and China, which heavily import oil, are at risk of experiencing import inflation if oil prices stay high. The increase in oil prices also leads to higher production costs for industries and elevated energy expenses for businesses and households, contributing to inflation. These elevated energy costs and emerging inflationary patterns might hinder central banks' attempts to manage inflation, potentially leading to prolonged periods of high interest rates. The conflict could also impact the India-Israel trade significantly. India's exports to Israel, primarily petroleum products, make up 1.8% of India's total merchandise exports. If the conflict escalates, it might lead to supply-side issues. India also imports machinery, pearls, diamonds, and other precious stones from Israel, and any disruptions could affect these imports. Additionally, the conflict might result in rupee depreciation, requiring action from the Reserve Bank of India, the RBI. The Israel-Hamas war has also affected equity markets worldwide, with investors turning to safe haven assets. Global equity markets, including U.S. stock futures and Asian markets, have seen declines. Gold prices have risen, both in spot gold and U.S. gold futures, and the dollar and Japanese yen have strengthened. The Indian stock market may not see an immediate significant impact, but it requires close monitoring, particularly if other factors such as Iran become involved. Wars have consistently demonstrated their capacity to disrupt and unsettle financial stability. While the immediate impact on markets can vary, they often lead to uncertainty, volatility, and economic setbacks. These lessons underscore the imperative of seeking peaceful resolutions and diplomatic solutions to conflicts. As we witness the ripple effects of war on financial markets, we're reminded of the importance of avoiding armed conflicts whenever possible. Peace, stability, and international cooperation remain the best safeguards for global economic prosperity and the well-being of nations. In which other ways do you think the recent escalation of the Israel-Palestine conflict will affect the financial markets? Comment below. Don't forget to give this video a like and subscribe to our channel if you have yet to do so. Be sure to also hit that notification bell if you don't want to miss out on our upcoming videos. We'll see you in our next video.